No, folks, there's no one to blow a siren. If you're looking to CNBC to blow the siren, either to get off the golf course or the all clear siren, you're never going to hear it. Nope. It's going to tell you just a little profit taking, normal, just a little correction. Folks, the banksters didn't get it, did not get the opportunity to build the big buildings in New York and Chicago from nothing. Okay. And you're not probably going to get a phone call from your broker saying, you know something, don't send me any money this month, things are a little dicey out here. So our recommendation is to get an education from someone, and we'll give you a little 2-minute view on what we're seeing. If you have any doubt as to whether or not this can be done on a day in, day out basis, I just ask you to go back and look at some of the free postings. Now, we do have a subscription service that folks get regularly, but you're welcome to look at some of the comments as recent as yesterday. So let's just take a look. It is, of course, on a golf theme. This is our strategy, the shark. This is stop level 1 and 2. This is the weather, the slope rating, the wind direction, the fairway width, and the individual high probability clubs that we periodically have other clubs, but this is the dominant 6 or 7 that we carry in our bag that we use to execute. We have the particular market volatility we like to keep an eye on, but we have the S&P, the Russell, NASDAQ, the Dow, the dollar, gold, bonds, currencies, sugar, anything and everything. And we use the very same proprietary systems. If you're looking at this and saying, geez, I'd like to have that, you can. And you would need to talk to Caddy Sue about how one would secure this. This is our proprietary systems, hard-coded from years of trading our own portfolio, written, basically it's our own intellectual property running on the TradeStation platform, which of course we have no affiliation with, but we think the world of. So let's just take a look and see what we're seeing today. Please go back and see some of our tweets from just yesterday in our video. We actually have a siren signal. We went short if you check our videos. It wasn't yesterday, I think it was the day before at noon on the Russell on a 1-hour basis, and we said that we thought it would increase. We had a siren call. This is on a weekly basis. Here is another siren call on the it's a reversal down on the weekly. And let's just look at the Dow. Look here at the 240. Here's a siren. This means get off the course. Today is not a good day to be buying stocks. Now, when we will get an all clear, there will be. I'm not predicting the end of the world by any means. It's just a distribution day. But we'll also get an all clear sign. At some point, there may be an opportunity to come back in. When that is, we let the market tell us. And is this the start of a 2-3 year downtrend? One never knows. Just like we didn't know we were going to catch a 5-year uptrend move for year after year here. So in any case, most people are relatively calm. How do we know that? We can look at the VIX. This is a contrarian indicator. When the VIX is long, which it is on the 60 and the 240, we would expect the markets to be short on a 60 and 240, and that's exactly what we're seeing. Here's the actual entry on the NASDAQ here. See, our system will not only tell you where you are in the course and get you on and off, but it also tell you precisely where to come in, where to get out in terms of the stop levels. And it's a wonderful tool. Saves a whole lot of time. You don't have to go from chart to chart. What will be interesting is, does the VIX really pop up and accelerate? Yesterday we sent out a video. I think we, God forbid, but talked about how depressed the VIX was. Even Mr. Tepper expressed yesterday how nervous he was, and that this could look like an ICBM being launched from a submarine, just explode. It's been depressed so long, artificially depressed, it could really pop off. And if that was the case, it would be very adverse for the markets. We also commented, and we want to come down and take a peek. I not making anyone dizzy. The bond market, let me bring it into view. The bonds is another correlation that we pay attention to. You can see all this green, a lot of green on all time frames. Look at all this green. People who are long bonds have been in the green. They're doing well. I'm not saying you run out and buy the bonds now. You would have wanted to have been buying the bonds, and was further corroborating our view that the market was going to be in trouble. So we don't rely on any one market. We look at multiple markets because we're students of the market, and we use these technical tools to tell us what direction they're going so that we know how to allocate our capital. That's what this is. It's a game, a business of allocating capital at the right time in the right markets, and also knowing when to exit. If you're relying on some gentleman in a big tall building, good luck to you. That's all I can say. Be in touch. Good luck.